Morning YouTube, back at it again, another episode of The World is Burning. Yes, the world is still burning, people. If you're new here, take a seat, enjoy, welcome. We're just covering some of these financial issues everyone's going from. We're going to be covering some of these collapses as well. Today we're talking about default rates, people. It's not just individuals defaulting on the credit card, student loans, auto payments. It's companies as well. Corporate defaults at highest rates since global financial crisis, says S&P. Elevated borrowing costs take their toll, with 29 companies having defaulted this year. It's just not a good sign, guys. It's not a good sign. This year, global's tally of corporate defaults stands at 29, the highest year-to-date count since the 36 recorded during the same period in 2009. What happened in 2009, people? Was that the year after the Great Financial Crash? Was it? I think it was. UK banks expect sharp rise in defaults on unsecured debt. Banks lending out on unsecured debt is always a bad move, people. Lenders forecast biggest quarterly increase in missed repayments on credit cards and loans since 2009. And guys, something is classed as going into default if you miss one payment. What else is going on? Default, transition, and recovery. The US leveraged loan default rate could climb to 3%. US leveraged loan default rate could rise to 3% by September 2004 from 1.9 in October 2003. It's not a good trend. We're doubling that. Literally doubling. Speculative grade credit quality has already deteriorated. These speculative bets, guys, these speculative investments, they're going into the gutter. Absolutely going into the gutter. Disgusting stuff. Corporate junk debt defaults hit post-pandemic high in February. Defaults among US corporate junk debt issuers reached a post-pandemic high. Great news, guys. In February, JP Morgan said in news research, 9 junk-rated borrowers either filed for Chapter 11 bankruptcy or missed their interest payments on a total of $5.97 billion in loans. Other companies opted for a distressed exchange on a total of $3.69 billion in loans and bonds, reported. Add it up, guys, that's nearly $10 billion. It's absolutely ridiculous. Last month's $9.9 billion in combined defaults and distressed exchanges surpassed 2023's monthly average of $7.2 billion, JP Morgan said. Guys, this is unsustainable at this point. This is unsustainable. Elevated interest rates are pushing US corporates into default. Who would have guessed that, guys? The interest rate going all the way. I thought this was quite interesting. Look at this. 17th of March, 2022, 0.2 to 0.5% interest. This is what has destroyed the economy, guys. All this cheap money going out there, people getting over leveraged on these cheap interest rates. Now they're going to have to redo it at 5, 6, 7, 8, 9%. It's too much, and they're going to go into default. They can't keep up. Defaults expect to rise towards 5.5% in Europe and reach 6.6% in the US. Guys, what are we talking about? Corporate debt defaults soared 80% in 2023 and could be high again this year, S&P says. The number of companies that failed to make required payments on their debt totaled 153 for 2023, up from 85 the year before, 80% increase. In 2024, we expect further credit deterioration globally, predominantly at the lower end of the rating scale. All this junk stuff, guys, is going to just go tits up. It's going to go tits up. All these junk bonds, all these junk investments. Loan default rates and student loan repayment. This is a fun one, guys. So we're not talking about corporate now, we're talking about individuals. A survey found that 45% of borrowers with student loan debt are struggling financially now that payments have resumed. 45% of borrowers with that's almost half the people with student loans are struggling now, guys. Falling behind on federal student loan payments can have severe consequences, including damaging credit and wage garnishment. Isn't that fun? Borrowers can protect their finances by exploring options such as income-driven repayment plans, deferment, forbearance, and loan consideration. That's their answer for you, guys. It's not, let's do something about this debt. Let's stop making college so expensive so you leave with 6 figures in debt. No, it's okay, guys. Just do an interest-driven repayment plan, a deferment, a forbearance, or a loan consideration. Default rates on mortgages and credit cards expect to rise in the months ahead. Classic. Auto loan delinquencies hit 13-year high as monthly car payments get bigger. Who would have thought that, guys? As monthly car payments get bigger, people are struggling to pay them. Alright, guys, I haven't watched any of these videos. I don't like to watch them beforehand. Let's watch them together. Let's see what the world's saying about some of these debt mispayments.
CRA is in debt recovery and coming to all the poor people and shaking them out for every nickel they got. Crap is going down this tax season, and y'all need to keep an eye out because you are even a little bit in doubt with how you filed your taxes over the past 6 or 7 years. Keep an eye out because they're coming.
Yeah, and like the best part is that it's not even people who've done something shady. It's like somebody who is a small business. They had a shoebox of receipts. They went through it all with their accountant, did it all, and then filed. Or somebody who were a student and they had their T2202A, put it in, and then never really thought about it before because it doesn't really matter. You know, it was 5 years ago. They're coming after those people and they are putting them through the ringer because they know they're not going to afford to buy legal counsel or an accountant or something like that to fight them, and they know they'll just give in because they don't know where their records are or they have, you know, done a poor job keeping up on their records. It's ruthless, and it screams a government that has overspent and is looking to claw back money from the people in any way possible that is quote unquote legal, right?
Absolutely.
So they're not hitting the corporations. They're not going, Mr. Trudeau, where did the 500 million go that you supposedly sent for vaccines that never came? Nobody's talking about that, but they're talking about, Gladys or Agnes down the street who forgot to file something correctly or who didn't keep their receipt from 7 years ago. That's who they're...
Yeah, Canada is fucked right now. Absolutely fucked. Why does the Canadian government hate its citizens? Look at this one here. They made me prove I still have my kid, my 16-year-old autistic kid, like I somehow lost him. The sad part is they go after the good people and don't go after the shady people. Yeah, it's rough in Canada right now. Leave me a comment if you're in Canada.
When the pandemic happened 4 years ago, the federal government rushed billions of dollars in benefits to Canadians to help them through it.
An auditor's report found $4.6 billion was paid to people who didn't deserve it. And the
$4.6 billion was paid to people who didn't deserve it. So they're just handing money out left, right and centre, guys. And now they're going to go after all the people who they gave this money to, who spent the money. They're going to go back after you, 100%.
revenue agency wants the money back. Here's Pat Forn and Consumer Alert. Pat.
Nathan Amichelle, an Etobicoke man, says his job shut down during the pandemic. He felt he was eligible for benefits, so he applied for CERB and was accepted. That's why he was shocked to find out he has to pay back more than $38,000.
I don't understand why they're clawing it back. I really don't.
Terrence Bailey of Etobicoke says he was working as an auto consultant when the pandemic happened, which virtually shut down dealerships across the country. He decided to inquire about the Canada Emergency Response Benefit, CERB.
I thought, I'm going to apply for it. Why not? I've paid my taxes over the years, and I figured, okay, if it's available to me, then I'll take it.
Bailey says he was approved for CERB and received payments each month for a year and a half.
I was under the assumption that everything was fine and that it was accepted under good faith.
But Bailey was shocked to get a notice from the CRA saying a review found he did not qualify for the benefits and a $38,600 CERB repayment was required.
And they just expect you to pay it back, guys, without any. Just pay it back. We've done a review. Turns out you didn't qualify, even though we did qualify you back in the day. Now please pay us back the money.
Absolutely blown away. I have no idea that this was coming.
CRA told CTV News at the time of the pandemic money needed to be delivered extremely quickly to millions of Canadians, but that the Government of Canada made itself clear ineligible individuals would later have to repay amounts they had received. Tax experts say you can appeal your case, but if you have to pay back funds, contact the CRA.
They will make payment arrangements over time with you, and they will not charge you interest.
If you owe money...
So now you're just going to be repaying the government on top of all the taxes you have to pay. Pfft. Yeah, makes sense. Oh, but they're really good because they're not going to charge you interest on this, guys.
do nothing, your situation could get worse.
CRA can go further and take legal action against you if you don't contact them and make sure that you address the debt.
Bailey says he can't afford to pay back the money and fears he may have to declare bankruptcy.
I'm on old age pension and Canada pension. I mean, I make like $2,000 a month. And how am I supposed to pay back a $38,000 debt, pay my groceries and my rent?
And the CRA may hold back any tax refunds, GST credits, and other benefits until your CERB funds are repaid. If you do owe money, you may want to seek the help of a tax professional to see if they can reduce the amount owing.
So they're going to garnish wages, going to take money off your social security. There you go, guys. There you go. This comment here from Okami. They should ask Trudeau to pay back all the money he used for his family trips. Rules for thee and not for me, guys.
It's been a big day in the House of Commons. Jeremy Hunt, the Chancellor of the Exchequer, has just finished giving his spring budget statement, which sets out the government's spending priorities, likely to be the last big set-piece speech of this type before any possible general election. There are a few big things that came out of it. Some of the things that step change we really welcome. Some of the things we think the government probably needs to do a bit more on. Firstly, the one that's likely to lead most of the news coverage is a 2 percentage point cut in national insurance rates. That's likely to be worth about £40 per month for the average household across the country. As far as we're concerned as a charity, the things that we really focused on is 3 big announcements. Firstly, the extension of the Household Support Fund, which is a fund that's provided to help people with real essentials, particularly those households who are struggling in the cost of living crisis. That's been extended for 6 months, which is enormously welcome, and it's something that we and many other charities have been calling for. However, is 6 months going to be long enough? We don't think it will be. We know that there'll be households still struggling at that point who are going to need that support. Secondly, we saw some changes to universal credit, particularly the universal credit budgeting advances that people can access. At the moment, if you take out one of those advances, you have to pay it back in 12 months. You'll now be able to pay that back in 24 months. So that should mean that people in universal credit will have a bit more money in their pocket, although we're...
But it's money that they have to pay back, guys. And universal credit, you get fuck all money from the government. Absolutely fuck all.
Worried at the level of deductions that people are facing when they're on universal credit. And we also saw some big changes to debt relief orders, which is a type of debt solution. Currently, there is a £90 application fee when you take out a debt relief order. That's been scrapped, which is enormously welcome. We know upfront fees can be a real barrier to people getting help. And we also saw some changes to eligibility of debt relief orders, which will be really welcome and mean that more people should be able to access that debt solution. So lots of good news.
Yeah, I mean, the government, the UK government are trying to do stuff. I just don't. I think we're too far down the line, guys. Too far down the line.
You've been trying to pay off. They wouldn't pay the...
What's up, guys? This term is going to be pretty quick, but today let's talk about defaults. A default occurs when a borrower stops making payments on a debt that they owe. Defaults can occur on both unsecured debt and secured debt. An example of a secured debt that you can default on is a mortgage. An example of an unsecured loan that you can default on are credit cards and student loan debt. Defaulting your loans can heavily damage your credit rating. And this will limit your access to receiving credit lines from different financial institutions. It can also expose you to legal claims, which are never fun to deal with. Let me know if there are any other terms you want me to cover. Just comment them down below.
We'll leave it there, guys. I'm seeing no good news here. I think the rates of people defaulting are going to go through the roof. Everyone's already struggling. They've got no money. How are you going to pay all these debts back? And it's not just people. It's companies and corporations too. So, yeah, watch this space, guys. I think the news that we're going to start hearing over the next few months is defaults are going through the roof. I'll leave it there, but leave me a comment, guys. Where are you in the world and how are you seeing this situation in your countries? Love hearing from the community. And I'll catch you on the next one. Bye.